The markets are on fire. If you've been watching the markets at all, you know it's been a blockbuster week, one for the history books. Why do I say that? The S&P and Nasdaq didn't just flirt with new highs, they smashed right through them, setting fresh all-time records, not once, but multiple times in a single holiday-shortened week. The Dow, not to be left behind, surged just a whisker ahead of its own record, but close enough that it looks like it's going to be a strong start to the next week. If you're feeling a little giddy about your portfolio, be careful because these kinds of times can often revert to a pullback. But for right now, we are starting the third quarter on a strong note, and the CB3 weekly update begins now. So what created this monster week in the market? Jobs, jobs, jobs. That was the big catalyst as the June jobs report blew past expectations, 147,000 new jobs added. The unemployment rate ticked up to 4.1%, but it's that kind of market resilience that gives investors confidence, even amid tariff headlines and global war uncertainty. So, tech and consumer stocks led the charge. Think about Microsoft, Amazon, Expedia. Bank stocks also added some flex to the muscle there, with Citigroup and JP Morgan both posting strong gains. The banks open earnings season, and that will really begin in earnest starting today. The CBOE Volatility Index, often known as just the VIX, dipped into the 16 handle range and finished at 1725, well under the 2022 range we've seen over the past several months. And that is because tensions are dropping, because it looks certain that the number of trade deals is going to continue. The Vietnam trade deal was helpful, seeing that close just this last week. Not sure if that's going to be a huge blessing to the U.S. on that, but that's a story for another time, namely my show on Thursday night. But the backdrop is that despite ongoing tariff drama and political headlines, the market's resilience has truly been remarkable. Congress passed a major budget bill, and President Trump signed it on July 4th. We'll have a lot more detail on that Thursday night on my show, but the big, beautiful bill is definitely going to affect the markets as people see more capital rushing into America to invest here. And let's not forget that quarter two was a comeback quarter. We were off to a rocky start in 2025 with the S&P rebounding with a 10.6 gain for the quarter, its best showing in over a year. The Dow and Nasdaq also posted double-digit percentage gains for the quarter, shaking off the April tariff-driven dip. Now, it's interesting to me the timing of President Trump's announcement about these tariffs, because he knew if he waited into even the first couple days, which it was a couple days exactly, April 2nd, then the first quarter market performance would not be affected, and then he had an entire quarter to get the market back on track. At one point in April, the market, S&P that is, was down over 20% intraday and then recovered off that low to finish at lifetime highs. Pretty amazing timing, if you ask me. Delta Airlines reports on Thursday, offering a read on travel and consumer demand, and the tech giants and industrials will follow in the coming weeks. Watch for their guidance, not just the results. So there's always two components that you need to follow. What are their actual results, and then what are they forecasting for the following quarter? Again, the market is a forward-looking indice, always looking to the future. So with the market at all-time highs, expectations are high, and any surprises, good or bad, could move stocks in a hurry in either direction. So can companies maintain their profit margins and grow in the face of global trade uncertainty? Will the strong jobs market translate into consumer spending and corporate profits? How will management teams guide for the second half of the year? All of that and more this Thursday night on CB3 Live. So as we head into earnings season with the markets at record highs, this is the time to stay sharp, stay engaged, and dare I say, stay optimistic. Why? Because the market has had every reason to go into a protracted cyclical bear market, and it didn't happen. It simply did not happen. It went into a brief bear market for about 20 minutes with the S&P down 20% and then recovered to lifetime highs, all in the space of 13 weeks. I'll be here later this week to break it down for you on CB3 Live's July episode. So watch it, stay with us. We'll be back next week for more commentary. So keep your eyes on the prize. Tune in for those key earnings reports, and let's see if this rally has more room to run. I think it does. We at CB3 are optimistic for the third quarter performance of the market based on the second quarter earnings and the fact that it looks like the Fed is finally going to drop interest rates by at least 0.25% in this quarter. So I'll be here Thursday night for you for the show. Watch that. Same time, same place next week for this podcast. We'll talk to you then and see you Thursday night.